I'm recording. So yeah, man. Thanks for coming on the show today. I've been eagerly awaiting this conversation. For one, just because I think we share a mutual interest in monetary history and economics and that kind of stuff. And two, of course, what's going on around the world today. So yeah, I've been jonesing for a Bitcoin discussion and this one in particular. So, but before we get going, I mean, just for people that maybe aren't familiar with you and haven't consulted your work or your writings before, why don't you give a brief intro?
Sure thing. I have a background in finance. I was working 5 years in a Swedish bank here in Stockholm. Quit that work after finding out about Bitcoin. I think it was in 2016, something like this. And I just went down the rabbit hole from there. Started reading Andreas Antonopoulos, watching those kind of YouTube videos. After some years reading Saifedean Moses' book, The Bitcoin Standard. So I guess I went the regular way. So I became very, very interested in the monetary history, about money, or rather the dynamics of money, and just continued on this kind of road ever since. And actually, the first time I listened to your podcast, Rapid Fire, it was on an airport, listening to you and Eric Voskuil talking for, I think, almost 3 hours. It was a really long one. So that was the first ever Rapid Fire podcast I listened to, and it feels a bit weird to be on the same podcast now. So I'm very honored for you to invite me.
Well, I'm honored to have you, man. Thank you very much. So I think the place I want to start, and of course, we can take this anywhere we want to, but one of the things that I'm constantly astounded by, and I'm sure you are as well, is when you look back through monetary history, you see so many of the same mistakes being committed time and time again in very kind of eerily similar ways, and the outcomes are the same time and time again. And it begs the question, why aren't we learning from our mistakes as a civilization? Because we find ourselves in a very similar position today with what's going on, with the economy and with monetary policy. And so, I wanted to get your take on, first of all, what, just your general take on what's going on today, the approach of central banks and stuff like that. And then which episode in history do you think parallels most closely with what we're seeing today?
Mm-hmm. For one, I think that today's situation is more complicated than it was historically. Historically, even in these early paper money experiments, for example, in France, we have a couple of them that went to hell after some years. It was less complicated because the state mass printed money, and it quickly resulted in high inflation. Prices skyrocketed. The state issued certain laws demanding that prices be kept under certain limits. And this, of course, leads to economic disaster in the end when the producers cannot afford to produce stuff. So I think the situation today are more complicated, has to do with this bloated economic system that we have, or the bloated monetary system. They print money en masse right now, but it does not come out to the pockets of regular people immediately. I think it may take some while. It can even take up to a decade, That's why we have seen some Bitcoiners discussing this, and they have even pointed to the fact that we might even see some deflation before there is price increases. So I don't think there is any good historical example for today's kind of what's going on today. But in the end game, of course, if you continue to print a lot of money digitally or on paper, it results in the same effect, because eventually it has to trickle down to real people, real pockets, and real prices. So it's a bit dangerous what's going on today. I have focused my research on the early periods, the primitive monies, the metallic monies, and just the early paper money experiments. So I don't consider myself an expert what's going on today, but I am very skeptical about it. And I think everyone should be skeptical.
Yeah. I was reading your piece on John Law and the Mississippi story, and again, that conjured up many thoughts. Of course, there's differences. Things are more complex today, but I'll just read a quote just from your article that speaks to some of the similarities. And so here you just said, by the end of 1795, when the assignats were worth virtually nothing, a vast majority of them were in the hands of poor Frenchmen, while the rich and politically connected had already parked wealth in assets that obviously did not experience the same depreciation. And that's such a similar dynamic to what we have today, because the people with wealth are able to park them in pick your asset class that's more resistant to inflation and debasement, and then the people that are basically living paycheck to paycheck are the ones that see their purchasing power diminished with every passing day and who experience the pain of that.
That's exactly right. And when these monetary disasters continue, or when they start to implode, what's happening then is the state, in clumsy attempts, always try to remedy the situation. They edict certain harsh laws, and the laws will become ever harsher. And it's always the politically connected that can exchange their worthless paper for the little amount of silver or gold that is still left in the vaults. So it has always been good to be politically connected like that. And I guess it's a little bit the same today, maybe not as extreme as in the assignat experiment, of course, but you can be connected today and you can kind of siphon on the new money quicker than, for example, you or me. If you have money and if you have these connections.
Yeah, and again, back to that example, I mean, for one, as you mentioned, things in that time and in that instance, you saw, as you mentioned, all these laws being conjured up, very authoritarian laws being conjured up in order to try to mitigate the negative effects of all this paper currency. So people had, limits on withdrawal, and they couldn't buy this, and they couldn't use a certain currency under pain of death in some cases. And so all of these crazy authoritarian measures were taken just to try to prop up the failing system a little bit longer. And I know we're in a different dynamic today, the virus, et cetera, but there's certainly a lot of heavy-handed things going on, and it's hard not to draw a parallel between those and in a similar attempt to continue to prop things up and keep things functioning with some semblance of normalcy, and what happened in that period.
There's for sure similarities. I thought the same actually with the lockdowns, for example. There's prestige involved to be correct in this. Some states might not want to admit that they chose the wrong path of shutting down everything with the economic effects that this leads to. It's probably the same dynamics, just that it was even worse before, of course. John Law, or many of these early paper money experiments, they knew after a while that this did not work. People were starving. In France, they mass recruited people to the army in order for these people not to starve. But despite seeing all this carnage, they did not end the experiment. They continued to print this worthless paper that in theory is backed by silver and gold, but in practice you cannot obtain it. So yeah, I see some parallels to today's coronavirus hysteria as well. And I'm actually happy that it looks optimistic. If we take on a tangent to this coronavirus, it looks optimistic. Countries are opening up a little bit. Just today in my country, Sweden, we have been very liberal in terms of these shutdowns, and they opened up even more today by allowing kids to continue to play football, go and do their stuff, as long as there are fewer than 50 people. So it's virtually no shutdowns here at all at the moment.
Yeah, I mean, I'm amazed at the decision making that the cost of these shutdowns in all areas, economic, health, everything, that this has been the chosen course. And it's difficult for me to presume that it's entirely for the reason of preserving life, and not, there's no element of scapegoating, the problems that had been manifesting and festering in the existing system. So because now, we come out of this, and of course things are going to be different. Things will regain some semblance of normalcy, in my opinion, but I don't think we're going to go back exactly to the way things were. With all the money that is being printed and put into the economy, who knows what effects that's going to have, if we have this big inflationary boom, or if there's a loss of confidence much sooner, who knows. But the virus will be blamed for a lot of this stuff, when we both know, and a lot of people that are interested in Bitcoin know, that these problems have been, well, they're fundamental problems to the system, but they've been reaching a crescendo for at least several months, if not several years, and it's just very convenient that the virus swooped in to give a bit of a carte blanche to those responsible.
Yeah, I am personally convinced that the virus is much less dangerous than the money printing, or many of these measures that have been taken right now. It would have been otherwise if the virus actually had a really, really high mortality rate. Of course, then you can't really say that that the monetary decisions are worse. But I think they are right now. People are getting checks in their pockets from politicians. The names of politicians are stamped on the checks. It's just a recipe for disaster, and it puts a lot of moral hazard out there as well. People expect to be rescued the next time. Why should I save for my family if I'm gonna get bailed out by the politicians the next time as well? So there's this moral hazard all the time. You push the problem to the future, because in the future it will be someone else's problem when they're trying to get elected, for example.
Yep.
So I think a lot has been done the wrong way. And it's this small minority of libertarians screaming that this is not good, this has a bad effect of the long term. But people are very focused on the short term. And if you argue these things, they will become emotional very quickly and tell you that, well, don't you want people to have money in this crisis? Well, of course, but it is a personal responsibility to save money for yourself also. We cannot outsource this responsibility for the state. We cannot become a world of nanny states where they are expected to solve every single problem. And then if people actually did save, and there's still people that did not have the proper preparations when any kind of crisis hits, it's always possible to help. If I have money, that we try to help our neighbors and our friends, but we shouldn't rely on a strong state in this regard.
Yeah, I couldn't agree more. And I think, the nanny state mentality in many places around the world was already extremely prevalent. I come from Canada, you come from Sweden, two countries with big social welfare, components to state activity. And, anytime something emerges, something unexpected, something detrimental, people and companies alike, fully expect the government to swoop in and fix things. And they seem to fail to realize that the government doesn't have, a magic wand and can rewrite reality in some special way. All they can do is, basically reallocate resources to try to attempt to cover up problems. But I think we're in an era now where we're the funny thing is people tend to not believe something is happening to them until it's too late. And I want to do, like some of the things you've written about are perfect examples of that. But, I think these UBI checks and the things that we're seeing, these stopgaps, are just an attempt to slow down the unraveling so that people remain calm for longer, so that they don't fully realize what's happening until it's basically too late. And, one of the interesting parallels, again, I hate to keep going back to it, but it was such a, there's so many rich examples from the past, but in the John Law, episode, interestingly, things started to kick off in March of, I can't remember the exact year there, but, things really started to unravel in March. And things happen so quickly once they begin to happen. Once confidence begins to get lost in the currency, in the government, in the system, then things unravel very quickly. And
Yeah.
I think, and we're seeing now, the Fed, I think, not sure the exact dates, back in end of March, I believe, they made their 3 most aggressive moves of all time in the span of 10 days. So what more could be an alarm bell than behavior like that? But one, most people aren't connected to that. It's not on the mainstream media, so it's not in their faces. And 2, like, I wonder, I could say this to people in my environment, but until people feel the pain, most people seem unmotivated to act, to protect themselves.
Yeah, the thing with these kind of the monetary disasters that I have been writing about a lot, they don't occur very often. They occur with, they can be decades of quite well-functioning countries, but then sometimes at some time the reality is catching up with you. If you have printed too much money, you cannot escape it by only printing more and more. There will always be this catch-up effect by economic reality. So the way people kind of tend to think about it right now, with the Fed printing money, etc., they almost think that they get resources from somewhere else. But when they print money, where this purchasing power coming from? It's from our pockets. It can't come from anywhere else. The state is just it's a bunch of people working for the state. So there's nothing magical about it, as you indicated. And this is what I think many people fail to realize. It's part of the education system that everyone is taught that the state should manage the money, and during bad times they should spend more so that we get the economy rolling again. But it's again this kind of, it's again that people do not realize that when they spend the extra money in bad times, for example, if they did not have this purchasing power, that purchasing power would have been in my pocket instead, and my family's and everyone else's. So they would have been able to make those decisions of where to spend their money individually. So yeah, so people treat the state like some kind of magical entity that can solve things, but it's just taking purchasing power from people. This is my point.
Yeah, the irony, is that people perceive the state that way, when in reality it's the exact opposite. It misallocates resources. It allocates resources less efficiently, not based on the true needs as dictated by the balance of supply and demand in a given market. So, it's a parasite really on prosperity for the most people possible. And we live in strange times that people see it as the exact opposite of that.
Yeah, one interesting effect here is that people in general, they want a small inflation. They see a small inflation as the kind of motor that keeps the economy going. But when you start to read some Austrian economics, you'll quickly realize that all the economic transactions or all economic exchange is between one individual and another individual, or companies, for example. So when I have money in my pocket or stored at home, and I choose not to spend it, this is a decision because I did not find the product that I want, that I valued more than the money in my pocket, or the service. I did not value the service more than the money in my pocket. So when the state ramps up inflation to force me to spend, that is in itself misallocation of resources. It's not even the state that misallocates the resources. They're forcing me to buy stuff that I did not want to buy on the margin at that time. And they force me to, for example, invest in projects that I did not deem investable. Because if they would have been investable, I would not have the money in my pocket. I would already have invested. So there's always this, I think you can learn a lot by looking at individual action. Why individuals act or why they do not act, instead of trying to create these magical aggregates that the state has to manage with ramping up inflation or ramping down inflation. I think one thing that Austrian economics has taught me is to always start from the individual. And if the individual do not conduct a specific action that the state wants him to conduct, there is a reason for that. And it's bad if you're forcing this individual to do this.
Mm-hmm. Yeah, I agree. And I think one of, in very simplistic, but I think truthful ways of putting it that a lot of people don't realize is that all the state can do is either inhibit or compel your action. And presumably whichever one it chooses, it's opposed, if it needs to do so, it's opposed to the one that you want to do. So if you want to do a certain action, then the state exists to inhibit that. That's the role in that part. Or if you don't want to do something, then the state literally exists to compel you to do so. So it's I agree that it's important, and to look at things from an individual perspective, to see things clearly. But one of the, so I think a lot of people, even if they're not into monetary history, even if they don't follow this kind of stuff, most people understand what inflation is. Maybe they don't understand how it works. Maybe they, rely on the CPI rather than the increase in the money supply or whatever. But most people know that if things get more expensive, that's bad for me. If my income, whether it be investment or my job, doesn't keep pace with inflation, then I'm worse off. I think a lot of people get that. But what I think, and that's of course a result of the government's control and issuance of money. But what I don't think a lot of people understand is what effect that manipulation, that control has on price signals, and what the effect of turbulent price signals and erratic price signals have on the economy. And so when we look back at these episodes in history when paper monies have failed, what followed the inflationary period was a tremendous amount of social unrest because of the breakdown of price signals and how that impacted the real economy and the ability of people to put food on the table and to basically trade with other people and buy things. So, can you, for people that maybe haven't looked at it from that angle, can you look at it from that angle? Because I know you've written a little bit about it, and kind of
sure.
elucidate why it's so important to consider not only the theft of inflation, but how the interruption in the price signals has an effect on social behavior.
Sure. Yeah, the price signal, it is vital for in a free market. If the price of a good increases, this is like a big red flare in the sky for all the producers of this good to produce more of it. So we see, for example, today in this corona crisis, there are laws of maximums being put on various medical equipment, these masks or whatever, that the sellers of this equipment, they are not allowed to sell above a certain price. So this is an example of where the government are messing with these price signals. If they set a roof of above the price cannot rise, that is the same as ordering all the producers of this good that don't produce more of it, because you will not make money. So the price is very, very important in the economy. It tells you where to put capital and hands to the task of producing more. And we see a similar effect. Okay, now I spoke about corona times, but let's take a normal year. The interest rate, which is the price of money over time, borrowing money over time, lending. If you mess with this, which the central banks are doing, they control the interest rate. That is the same. It is not letting the natural interest rate show itself to all of us, so that the projects that would be profitable get the capital they want, and that projects that are deemed not profitable would not get the capital that they want. So when the Federal Reserve, for example, are pushing down the interest rate, this just means that machines, tractors and whatever machines that kind of embodies capital, they will end up working on projects that were not economical from the first place. And this means that projects and ventures that would have been profitable, good ventures, they are lacking this real capital. So it's again this misallocation of resources. You only have a fixed amount of capital at a given time in the economy, And when you have the state controlling the interest rate, you make sure that this capital is not allocated to the good entrepreneurs. It gets allocated to bad entrepreneurs as well. And it might even be worse than this. It might be that even some of the good entrepreneurs, which has actually good industries to build, they will not get the capital needed, so their projects are not even finished. You saw it in Spain after the last financial crisis. You see these hotels and the building complexes that are half built, kind of, that they are left to just stand there because the company went bust in the middle of the process. This is indicative of where the interest rate is pushed down artificially, so that there is not enough capital to continue those good projects. It is spread out on a wider basis, and you end up with, you know, this half baked or half finished investments. So price is very important. You should always let prices be free, because the economy is complicated. If you mess with the prices, it's going to have ripple effects all over the economy.
Yeah, this insane idea that you can micromanage something that's so complex as, you know, even a national economy, but certainly a global economy, where there's trillions of daily calculations and interactions. The idea that you could ever aggregate enough data and interpret it to make better decisions than the emergent properties of the market itself elucidates is just, you know, it's crazy to me. And to your point, you know, manipulating interest rates like this, in addition to, you know, messing with the price signal, but, you know, especially on the downward trend that they've been for many, many, many years now, you know, you're just attempting to artificially bring so much production and consumption forward, you know, because you need it for whatever political end or for stability or whatever. And, you know, there seems to be very little consideration of what happens when that gravy train ends, when you can no longer manipulate it. And, you know, look at us now. We're in real negative interest rates in most places in the world. And, you know, at some point it has to stop. And all of that production and consumption that we've effectively stolen from the future by manipulating interest rates lower and pushing that production and consumption forward is probably going to result in very austere times in the not too distant future. And so what I'm wondering from you, as someone who's studied this stuff, what do you think of course, we're both into Bitcoin, and I think we're probably both hoping and expecting that at some point Bitcoin emerges from this as a type of savior on which to rebuild, you know, effectively the global economy, and maybe a life raft for those people that you know, see that during this crisis. But I guess in the short to midterm, how do you see this unraveling, and what kind of a world do you see manifesting as a result of that unraveling?
I personally think it's very hard to predict when something is going to happen, how long they can be kicked down the road, so to say.
Yeah.
I think, of course, economic reality always catches up, as I said. So there will be a real crash sometime, for sure. I don't know when it's going to happen, and I don't speculate it either. Or at least when you think about equity markets, for example, I try not to think when they're going to crash, because that's always ends wrong. But I mean, if we take Bitcoin, yes, Bitcoin helps in the situation a little bit, because if there's a crash, the states might need more money, for example, and when they print money right now, that's senior rush going into their pockets immediately. Bitcoin lets you at least avoid that senior rush partly. You still have the capital gains tax if you ever were to sell your Bitcoins, so that they get a part of the senior rush anyway. But Bitcoin at least lets individuals move between jurisdictions. For example, if some country becomes too harsh in its dealings in how to actually mitigate the future crisis, you can always take your Bitcoin and go, hopefully. Yeah, so I for sure think that there will be some type of crisis, but it's very hard for me to see exactly how it will look like.
Right. Yeah, you mentioned, you know, the playbook of how this has gone down before, and I won't fearmonger too much, but you know, one of the concerns is, of course, I mean, the unemployment numbers just came out from the States today and added another 6 million, so they're up at 22 million people who filed for unemployment. And you know, when you have this perfect storm of, you know, financial crisis, high unemployment, you know, shifting geopolitical powers around the world, I mean, it's a very convenient way to chop that unemployment number in half, is to, you know, require people for service, let's say. And that's happened many times throughout history. And you know, the thing that makes me more hopeful than anything is Bitcoin exists now, and nothing like it exists in the past. And you know, even gold is totally permissioned. It's not permissionless at all. You can be told you can't use it, you can't spend it. If anyone finds it in your house or you try to use it, then you go to jail, you get killed. So, you know, nothing has ever existed to as a, you know, a real viable alternative to opt out. And I'm glad that it now does, because it hopefully will change how we collectively as a civilization respond to this kind of stuff. But you know, it's the authoritarian playbook is well established, and I can see things being drawn from it in this instance as well.
Yeah, I think a lot of this, we're talking about the money printing right now with the Federal Reserve. I think a lot of this is actually going on because people don't have the proper view of what money is. Mm-hmm. I personally subscribe to the Austrian School of Economics. It is a very, very simple, you know, way to explain how money emerges, how money thrives, and how money dies, or is dethroned, if you will. So I think if it's a lot to ask, but if people understood properly how money emerged in human civilizations and what money really is, that it's nothing magical, it's nothing that is in a sense much more different than a regular good like livestock, or livestock were money before, or seashells, for example, then I think it would be a less push towards politicians actually managing money or asking other people to manage money. If you want, I can give an example actually for the listeners of my theory or how I view money, because it might be relevant to actually understand what we're talking about when we talk about money. So let's take this example, a quick example. Let's say I'm a potato farmer and you are an orange farmer. I have a surplus of potatoes and I want to exchange. I cannot eat them. I don't want them. So I want to change this surplus of potatoes for some of your oranges. I go up to you with these potatoes, and the thing that will likely happen is that you will decline this barter, because while you have something that I want, I might not have something that you want. This is called the lack of coincidence of wants. So in the Austrian theory, which I'm writing about in my book, Money Dethroned, it's just that in order for me to obtain those oranges, I have to go through an intermediary good, a third good. It might turn out that you, for example, want bags of wheat. So I take my surplus of potatoes to the guys selling wheat. I obtain the wheat and I take the wheat to you in order to obtain oranges. But this is how I view money. The intermediary good in indirect barter, in this case wheat, that is money. That is the medium of exchange. And it's important here also to understand that in the same society, other people that are conducting the same kind of barter situations, they might pick other intermediary good as money. So in a society, there might be many monies operating at the same time. And we saw this historically in India, for example. They actually had wheat as money and silver at the same time. So this is why I'm one of those who actually emphasize that money is just a medium of exchange. It's very simple. It's just to get past this problem of a lack of coincidence of wants. And I think that if more politicians and central bankers understood this, they would not really perhaps want to mess with it as much, because they treat money as if it is some tool that you manage countries with or manage the economy. It's not. It's just to solve for the inefficiencies of barter. Yes, so to make this example even more realistic, let's say that I'm still a potato farmer. Let's say that it's not only you who sell oranges. Let's say that there's many orange farmers and I still want to obtain these oranges. Some of the orange farmers, they might demand the wheat in payment, and some might demand, for example, copper rods. This leaves me with a choice, and here is the key of the Austrian theory of money. With my surplus of potatoes, I can choose between either obtaining the wheat to get to the end goal, which is the oranges, or I can choose to obtain the copper in order to get the oranges. And in this situation, I will always pick the road that costs me the least of money in terms of, for example, transaction costs. So in this example, it might be that the bags of wheat are more liquid. They are more liquid on the spot market. By the way, just interrupt me if you have some questions.
Sure.
So it does not make sense for me then, if the bags of wheat are the most liquid, it does not make sense for me to choose the iron rods in order to obtain the oranges. And this is the Carl Menger theory of relative salableness. These are the dynamics at play. So when, for example, when society progresses and people have actually more stuff that they produce and more stuff that they want to save, then it makes sense for me, for example, as still the potato farmer, I have a large surplus. It makes sense for me to not switch all this surplus to the bags of wheat, because I will just use few of them in order to obtain the oranges, but I will still have a lot of wheat to take home, and I have to use them as money in the future. And what happens when you store wheat over a long period? It starts to decay and it starts to rot. So we see here, like as soon as a society creates a lot of surpluses, and the more people want to save money, the more important is it that I choose another type of money that has the better fundamental properties or physical properties. So it might make more sense for me to acquire the wheat in order to get the oranges quickly, but to also exchange parts of my surplus for example, the copper rods. And this is what happens when more and more individuals that want to save money at home, what happens when they obtain copper in this way. The price of copper increases because suddenly people demand copper not only for their own consumption or for the use of copper in production processes. Suddenly people want to acquire copper in order to exchange it further in economic exchange. So they use then copper as money. And what happens when more people demand it in this manner? The price increases. And when the price increases, the producers all over this area will try to produce more copper because they want to make a profit. So suddenly even those who hold copper money at home to store into the future, they will see the copper market flooded with added production, and their savings might be diluted, and the transportability, for example, of copper might be hurt as well, since a lower and lower value to weight ratio might be the reality. So people have to actually take more and more copper on themselves when they go and transact. So now we see that wheat was money, and it became worse and worse money with more and more savings. We see that also copper, which became money, become ever worse and worse money. So there's this constant Darwinian forces that takes people to always choose better and better money, because they, as individuals, they want to cut the costs of economic exchange. So some smart individuals will then go from picking the wheat as money. They will choose to store their wealth in things that are less dilutable and more easy to transport. For example, silver and gold. So even if silver have a very, very low liquidity on the spot market initially, and it's rather expensive to purchase it, if you're storing that for years, the savings that you make in actually being able to store it without it being dilutable offsets the initial low transaction costs. So you will see this constant shift towards these harder and harder monies And while people are shifting to these harder monies, the price of it goes up, and the liquidity of them also increases as people want to obtain them. So this is the essence of how I view money. You have this kind of Darwinian shift that individuals will always try to pick the least costly money, and this essentially leads to silver and gold. So all roads lead to silver and gold. We saw this historically in my book. I bring up, for example, there were hundreds of primitive monies operating as money before the metallic standards came, and those were demonetized one after another. And I have some examples. Until the world was operating only on copper, silver, and gold. And I think that if more people understood this Austrian version of money, that it's just a way to minimize various costs when you're exchanging your produce with other people, then they wouldn't use it as some kind of magic tool to organize an economy.
Yeah,
this was a long-winded explanation, but I really wanted to get it in here because I think it's very important that people understand the Austrian version of money. It's very simple, it's very clean, and it's very humble.
Yeah, I totally agree. And I think for most people, even for those, the many people that we often decry in government, it's mostly ignorance. They don't understand these things. They don't have a framework for monetary history. They don't understand why and how these processes unfold. But for a small group, I think they do. And I think money is a tool, and you and I, and perhaps in the Austrian school and others, probably see it as the rate limiting factor, or a tool on which how we assess and how we access our potential through cooperation and trade. And we judge it based on the inherent qualities it has and how those qualities will function as we use it in that nature as that kind of a tool. And so if it doesn't foster trade and exchange between in time and space, and doesn't foster prosperity, we think, oh, we got to find something better, right? So I think we're idealists, so we're monetary purists. We're always looking for that next evolutionary step in money, because we realize how important it is. And if the better we can make the money, you upgrade the money, you upgrade the market, the civilization, the culture, what have you. And so we look at those properties and we assess them through that kind of lens or perspective or worldview. But I think some people look and say, I understand some of the functions that money needs to provide, but I have a different intent for the money as well. And so I think some people will judge money not based on what's the best possible money for maximizing and optimizing voluntary exchange and cooperation and the prosperity that stems from that, but what's a suitable money that still allows for a certain degree of control. And I think that's part of the reason why we have the money we have today, because some people realize this, and I think they know that paper money isn't a good money. They know that there's other better monies out there, but the other monies don't permit the level of control that the paper monies do. And I think and this is not in the realm of conspiracy at all. I mean, for certain people, it's a rational economic calculation. If you're close to that spigot, if you're at the top of that, if you have that control, then it's an entirely rational economic calculation for you. It may not be the most moral calculation, but if we're just talking economic calculation, it's perfectly rational. So I think we view money through different lenses. So it's not only just comparing attribute to attribute, but what does the money allow us to do? And that is a subjective assessment based on all the different things that we have access to.
That's true. It's for sure subjective, and this dynamic that I was explaining, it's valid on the free market. That's how the evolution of monies work in the free market, and it explains perfectly how we went from, as I said, hundreds of different monies all over the world, and you end up with three. And I would argue that there were no other roads than to actually end up with those three, because while people subjectively value which money that they want, economic reality is not subjective. So if I choose to hold money that is easy to produce, if I have the glass beads and I store my family's wealth in glass beads, for example, while the European ships come with, you know, the hulls full of glass beads, it doesn't matter that I wish that this money, or I think that this money is the best for me. The price of this money will go down, and you will have the hyperinflation. So the state power over money, it has kind of disabled this market, the market forces with regards to money, but they are part of the same salableness dynamics. So, for example, in the US, you have the US dollar. It's completely the dominant money. This is because the US dollar has the highest salableness in the US. How does it have the highest salableness? It has because of the laws. You have to pay taxes with dollars, and all other monies are having their salableness artificially decreased with various laws, that you are not allowed to use various monies. So they are part of the same salableness dynamics. And I think a good way to understand it is looking at Venezuela, for example, the money there. They might decree by law, or they might say on the state TV that Venezuelan Bolivar is a strong currency, but on the market, it might have a lower market cap than, for example, gold or US dollars, even though it's traded in the black market. So these state monopolies of money, they can escape economic reality for a while, but once they start to mass produce, people will anyway opt to get the most saleable money, even though it's illegal or if it's in the gray zone. And Bitcoin, I think, is a good example of this. Bitcoin has an incredible salableness over time. It can't be diluted, and there's almost no cost of, you know, assessing the quality of which Bitcoin you have. You have your full node and you can assess it. So the Bitcoin has an extremely high salableness, I would argue. So the main weapons the state can use against it is, for example, if one state bans Bitcoin, well, then the salableness of Bitcoin decreases a little bit in this jurisdiction. But they can also increase the salableness of their own monies by not mass printing. But this they evidently fail to do. So I'm very optimistic about Bitcoin, and I'm viewing Bitcoin in this framework of Austrian economics. And according to this framework, it is absolutely logical to be very positive, very optimistic about Bitcoin, I would argue. When I first stumbled upon this Mengarian framework of money, this is when I actually thought it's game over for all the shitcoins out there. Because once you understand the forces of relative salableness, that it doesn't make sense to own the second least expensive money, then you can argue that all these shitcoins, since they're more centralized, the salableness across time is lower because the central parties can actually over time dilute them harder. They can dilute them, so they don't have a chance. People will pick Bitcoin precisely because it has the highest salableness.
Yeah,
exactly like people picked silver, copper, and gold in the end, even though they had hundreds of different monies to choose from.
Mm-hmm. Yeah, I couldn't agree more. And I think, when people begin to have an appreciation for what money is and how things emerge as money in a free market, then, all it takes is a little bit of, education around Bitcoin, and it's a pretty obvious, conclusion. Which is why, as you say, these economic realities, and I agree, will ultimately play out regardless of who proselytizes or educates for them. But and I do oscillate, but part of my motivation for putting out information and talking to people about it is maybe we can mitigate, the damage or the downside of that transition, of the people that may be harmed in that process because they're not as, aware of how it all works. For sure.
I think so too. Of course, if everyone was forced to use the state currencies, the situation is always a lot worse than if you have. I think even in our example that we talked about in France, during those implosions, there were some gold, even though it was forbidden on pain of death to own gold and silver at home. People were obviously doing it, and they tried to escape the country with the silver and gold. Many were caught by the police on the roads, and they were executed in the end. But even just the fact that some could escape with some money at least, that of course helps. It would have been far worse and far more starvation if everyone did not have any access to gold or silver. So in this case, Bitcoin, it's an escape hatch for some people. It will not help everyone, but because there will always be someone holding on to this bad money in the end.
Yeah, I totally agree. One last thing before we get to the last part, but I'm fascinated by all the, as we mentioned, instances in history, and I think a lot of people are probably familiar with the Byzantine Empire, and I know you wrote, I think it was your most recent article, and I just wonder if you could kind of summarize that, that article here, because just for a little historical interest juice before we move on.
Yeah, sure. The funny thing is, when I published this, it's a chapter in my book about the Byzantine Empire, and when I published this as a free article on Medium, I got all these trolls after me. There's apparently Byzantine nationalists on Twitter that attack you if you say anything bad about the Byzantine Empire.
Really?
Yeah, but I mean, I have no opinion on the Byzantine Empire. I come from the point of that they messed with the money and they paid some type of price for it.
Right.
Of course, the debasement story of the Byzantine Empire, it's not the only reason that an empire falls, but it's part of the puzzle, and they did not like this. But in any case, yeah, the Byzantine Empire, it was the Roman Empire fell, and also, in my opinion, because they debased their money to oblivion. The value of the Roman solidus coins fell to virtually zero, and they had economic hardships because of this. They cannot afford all the defenses that they need, and the empire is falling. So then you have the Emperor Constantine. He kind of revived the empire from Constantinople in the East Roman Empire in the 4th century after Christ. So he issued the bezant, which is 100% pure gold coins with no debasements, and the empire operated from around 400 after Christ to around 1000 after Christ. So 600-700 years of pure gold money, and the empire stood. It was of course some hardships, but it expanded. And as soon as an emperor started to debase this money of the empire, then things kind of started to fall apart. Because when you debase the bezant in this case, if you put some silver into the gold coins, but you have the contracts with the legions and the soldiers stipulated that they are going to get paid X number of coins per month. And when they get the debased coins, they will feel cheated. They're on the front lines. There's not many silversmiths on the front lines that can assess the quality of the coins. So they kind of just accept it, and they don't see this gradual change of the debasements. So when they actually are sent home after the campaigns and they're going to spend their money, they realize that they have been cheated by the state. So of course this has repercussions with the defense capabilities. I find it likely that some companies of mercenaries likely just changed. They went to a more honest ruler, for example. Why stay with someone that debases your money? So this was a gradual process. The gold bezants, they lost their gold content over the decades there, and in the end, the Turks conquered. They conquered the Byzantine Empire. And I think that if you mess with the money, you're going to have troubles. I show this in 10 examples in my book, in various empires and various time frames all over the world. When you start to mess with your money too much, there will be economic hardship in the end.
Yeah, totally agree. And I think we're seeing that today. And for many people, it's, insidious and they don't notice it. But I think when you start assessing that and realizing that, you actually begin to see how even small manipulations of the money impact behavior of individuals in a given market. And for a lot of people, that's not counterintuitive, but it's not obvious. You think, well, why would the money change my behavior? I'm a free thinking person. I make my own calculation regardless of any outside force. But maybe most people would concede, like, well, maybe I am influenced by things, the media and culture and all this kind of stuff. But the money is definitely one of those things that when the nature of it changes you, and it changes your behavior. And that example you gave of the soldiers is just one very obvious, blatant example of that. But I think there are many more that aren't so obvious, and part of the reason why systems and abuses like that are able to persist.
Yeah, I agree.
So last part here, it's the rapid fire part. So you can answer however long and short as you want. The first part is a bunch of questions, bit of longer answer, and the last part is just word association. So if you want to pass on any of them, that's fine too.
Okay.
The first one we touched on already, but I'll ask it again from maybe a more concise answer. What is money?
Money is a medium of exchange. It's the intermediary good of indirect barter. It's nothing mystical.
If you had to explain Bitcoin to a 10-year-old, what would you say?
Bitcoin is money that the parents cannot take from you.
I had that answer recently. How will you know if Bitcoin has failed?
It will be reflected in the market capitalization.
What does Bitcoin?
A very, very, very low price.
What does Bitcoin succeeding look like to you?
Bitcoin succeeding would be more than 10% of the market value of gold, according to me, is a big success. So that would be $50,000 per Bitcoin.
What's your go-to resource for learning more about Bitcoin?
Twitter has a good. Follow the right people on Twitter, and you will have a lot of material that you might even not have the time to read all of it.
Definitely. What other investments are you interested in? You don't have to disclose any holdings, but what other investments are you interested in?
I think over the long run, equities, because Bitcoin is money. Money is not productive. It doesn't. You don't get more money by holding money. So of course, you may speculate on Bitcoin right now, that in the monetization process, according to Austrian theory, that it's going to rise. This is what I think as well. But over the long run, equity is a sound choice.
What's one piece of advice you'd give to someone just entering the space?
To not trust people and to not be overhyped. Always try to cool down your feelings and emotions. Don't get sucked into some shitcoin scam.
What movie or song is most related to Bitcoin in your opinion?
I think someone said Matrix already, but I would say The Truman Show.
Yeah, a lot of people say Matrix. Can Bitcoin be stopped? If so, what is Bitcoin's biggest vulnerability? If not, why not?
Bitcoin, it's not likely, but it can theoretically be stopped. The biggest threats are a full-on ban together with the states actually sorting out their own currencies. And I don't believe that the latter will happen.
What is something about Bitcoin you don't understand very well or you'd like to spend more time studying?
I would like to spend more time studying the game theory surrounding mining, the long-term effects of this SHA-256 proof of work that we have on Bitcoin. What implications are there? Because I think it's a very complicated subject and it would be good to understand it more.
When, if ever, do you think the first central bank will start adding Bitcoin to the reserves, and or will central banks even exist in 20 years?
I don't think they will add to reserves, and I think that they will exist, sadly.
What have you learned about yourself, or how have you changed, if at all, as a result of learning about and interacting with Bitcoin?
I think I've become more cynical with politics. Actually, I was more optimistic before, and after falling down the Bitcoin rabbit hole, you realize that the best custodian of your money is you, not government.
100%. What is your most controversial or contrarian view or opinion? If none on Bitcoin, any subject is fair game.
I will give a Bitcoin. So let's hope to spark some controversy. I think multiple implementations are better than having a single implementation variant of Bitcoin. So this is a trade-off between decentralization and technical risk. If you have a majority of the network running one implementation, for example, Bitcoin Core, which I run, this is good in terms of security. There may not be the chain split, accidental chain splits because of bugs. But from a decentralization point of view, I would prefer if there were a wider range of good clients that people could run. And most people don't agree with this view, I might add.
Ballpark estimate of Bitcoin's price in 5 years?
Between 30,000 and 50,000.
What is one question you'd like to see added to this list?
Are you sure about are you having control over your private keys? How is your private key situation?
Mm-hmm. Good question. And I skipped over one. What if we're wrong? What if, Bitcoin doesn't turn out to be what we think it's going to be, or what if it fails? How will that affect you?
I would not be happy. That would be very, very disheartening, because this is our shot at actually money in state. And it's just incredibly amazing that it just happens so that the first money the first cryptocurrency that was created was Bitcoin, and it turned out to be the most decentralized one. Imagine if the first one would have, the developer funding and this, groups that obtain. It could have been so much worse, like any of the shitcoins. But it just happened to be that it started in such an amazing way that Bitcoin has been able to keep the #1 spot.
Yeah, I know this is definitely not the correct way to think about anything, really, because you want to be objective as much as possible. But just there's so many elements of Bitcoin, how it started and how it propagated and everything, that I feel like you couldn't write it better in a storybook. It feels so right, the way that it all just came together. And that, maybe unfortunately, but that makes me even more kind of convicted in it.
Yeah, we are very lucky about this situation.
Yeah, definitely. All right, last part, word association. So I'll just say the word, you tell me the first thing that pops into your mind. Democracy.
Dangerous.
The Lightning Network.
Increasing salableness.
Government.
Clumsy.
Human rights.
Well intended.
Violence.
Natural.
Trump.
Sorry?
Trump.
Entertainment.
Ego.
I.
FOMO.
Mistake.
Wealth.
Freedom.
Privacy.
Difficult.
Hate speech.
Free speech.
Gold.
Underrated.
Guns.
Legal.
Revolution.
Dangerous.
Socialism.
Misguided.
Family.
Good.
Inequality.
Natural.
Hell.
Shitcoins.
Liberty.
Statue of Liberty.
Energy.
Mining.
Bitcoin.
What I do.
Beautiful. Emil, thanks for taking the time to come and chat with me today. Really enjoyed it. Is there anywhere you want to direct people if they want to either consult your work or get in touch or follow you?
Yeah, sure. First off, thank you for inviting me. It has been an honor. And people can follow me on Twitter. I'm Besant Denier, or just search for Emil Standstedt. If you're really interested in the background of the Austrian theory of money and the kind of examples that we have spoken about, you can buy my book on Amazon. Here it is, Money
Nice.
Dethroned, A Historical Journey. For the monetary nerds listening. So again, thank you for inviting me. It's been a pleasure.
My pleasure, man. I think with each passing day, there's more and more monetary nerds. So I'm sure there'll be a robust audience for your book. So congratulations on writing it. And thanks for coming on for a chat.
Okay, thank you very much.
See you, brother.
Take care.
Take care.